Welcome to Speidel's Federal Tax Minute. I'm your host, Catherine Zidane, and this week we're discussing some considerations when choosing a trustee. We'll have more information on this topic, including naming multiple trustees, licensing issues, and how much a trustee might cost in the bonus 1-hour webinar that's part of our post-tax season update and review webinar. To register, go to speidel.com and click Webinars. The job of a trustee is to oversee or manage the assets in a trust in accordance with the wishes of the grantor. A trustee can be a relative or friend, an individual professional trustee, or a bank or corporate trustee. There are pros and cons to each type of trustee. A friend or family member can provide a more personal touch and may be less expensive or free, but that person may not have a professional's impartiality, knowledge of a trustee's duties, or be willing to accept the potential liability associated with the job. A professional trustee, whether it's an individual, bank, or corporate trust department, may be less personal, but they provide constant availability, experience, investment skills, permanence, and impartiality. Trustees are required to administer a trust according to law and in accordance with the trust instrument. They have a legal duty to manage the trust's assets in the best interest of the beneficiaries. The amount of work required and the extent of access a trustee has to the funds is specified in the trust documents and state law. But all trustees are subject to the same basic duties. They have to act solely in the interest of the beneficiaries, both present and future. They cannot favor one beneficiary over another. This is particularly difficult when the trustee is also a beneficiary or a friend of one of the beneficiaries. They have to avoid conflicts of interest and/or self-dealing, control and preserve trust property while keeping the property productive, administer the trust with reasonable care, skill, and caution, ensure timely filing of all applicable income tax returns, information returns, and other legal documents as necessary, notify beneficiaries of important trust activity, and they have to enforce claims of the trust and defend claims against the trust. Although the trustee's duties may seem to be clear, problems and conflicts can often arise. Even if a trustee delegates a portion of their duties to a qualified professional, the trustee is still responsible and liable for the ultimate results. The old saying, "no good deed goes unpunished," applies to the actions of a trustee. Trust management is always reviewed in hindsight. If a trustee does a good job, they're simply doing a job. But if they do a bad job, the trustee is considered incompetent and the beneficiaries could sue. While it's not legally necessary in most cases, securing a bond could be a wise decision for the trustee. Preparing taxes for a person is a good starting point for acting as trustee, which may lead many tax professionals to be asked to act as trustee, but there's a lot of additional work that may or may not have a payoff great enough to justify being a professional trustee. As a tax professional, you may be held to a higher standard than other trustees, and in some states, acting as a trustee for your clients could require you to obtain an additional license. The potential trustee should read the trust document to be sure they understand the duties associated with acting as trustee and verify they can comply with the terms of the trust. If you or your client agree to be a trustee, it's a good idea to periodically meet with the grantor to confirm any changes made to the trust document or assets. For a list of upcoming live webinars, go to speidel.com and click Webinars. Upcoming topics include the post-tax season update and review, Speidel's 2023 summer tax webinar focusing on S-corporation and partnership issues, financial fraud, net operating losses, solar energy credits, and more. That's all for this week. Join us next time for another episode of Speidel's Federal Tax Minute.